Make sure the audio is good. All right, we good to go. All right, we good to go. Yo, what's good, y'all? What's good, traders? This is Jay Navari here, bringing y'all episode 6 of my D.N.T series, or my Diary of a New Trader series. A series dedicated to basically me, just like, like this is just my personal journal. So I'm just documenting this entire year of 2025, well, my entire trading year of 2025. So uh, that's what this series is going to be about. And in today's episode, I'm just going to be doing a bit of live market analysis from my chart markups that I did yesterday, explaining some of the things that I see based on how I trade the markets, or how I've been trading the markets for like the past year and a half. We're gonna do that, and then also too, I'm also gonna show you guys like the prop firm that I'm considering, basically going through with, or like taking, just basically like doing a funded challenge through them. I'm gonna show you guys that prop firm that I've think done a challenge with them before, and I actually passed, but I ended up failing the account because I had violated the drawdown. But with that being, just with all that being said, I'm gonna show you guys that prop firm. I'm gonna do like a quick little review of it. So if you guys wanna decide that you wanna, participate in it, or do business with them, also, you guys can very well do that. But so without further ado, we're just gonna go ahead and hop into the video. And also too, I ask that y'all please subscribe to the channel, like the video, and then feel free to leave a comment down below. Just, I don't know, just talking with me or whatever. But so I'll go ahead and go to the calendar, Forex Factory right here. So going into this week, Monday, nothing really going on Monday. Um, Tuesday, we do have um, Powell. He's testifying before the committee and before Congress, like all the Congress people. So like he's giving his take on what he thinks the economy is like and everything of the sort. So we got that as high impact news drivers. We have a couple on Wednesday. We have CPI Wednesday. That's going to be interesting. Then we got Fed. We got Powell talking again. Assuming he's going to be talking about the inflation numbers. Going into Thursday, we have PPI, then unemployment claims. So got some more news there. So, and then Friday we have core retail sales and retail sales. So another high impact news event. So so it looks like to start the week off, especially on Monday, it's not really a whole lot that's going to be going on. Um, it looks like more of our trade opportunities, or more of our like opportunities for setups, and that market volatility that we're looking for. It looks like it's more likely to happen on Wednesday, Thursday, and Friday. So overall might be a pretty good week overall for some setups. So there we go. We have that. We'll go to my charts right here. The first pair I'm gonna start out with are the indexes. So the indices, right here we got the Nasdaq. Right here we got the Nasdaq, and then we also have the Dow Jones, or also US 30. But going into last week, right? Because this is also on the daily chart. So last week from Thursday the 6th and January 31st, right? We had SMT occur at these highs right here. So right here, it's a little small SMT too. But if I like hover over for the high of NQ from Friday, January 31st, if I hover over it, you see that the high was 21,966. Then if I hover over to the high from February 7th, 2025, it's 21,968. So it's like a small slight S&T divergence. We still, this candle still did close higher a form a higher high than the high that was from Friday of January 31st. But um, nonetheless, still have S&T divergence, and also too, we also have S&T divergence right here with from Thursday to Friday of this past week, and Thursday to Friday of this candle. So this high right here is higher than this one, whereas so NQ made a higher high, the Dow Jones made a lower high. So we also have S&T occurring right there. Remember what I said too, like in most of, well, in a couple of other streams and other trading videos, I mentioned that like you can see multiple SMTs, right? But just based off of this one right here alone, from a daily perspective, we see that the Dow Jones is the weaker asset. And also too, since it's provided me the clearest price action, I'm electing to trade this one. So going into this week, also right here, you see we had the Sunday's opening price marked up right here. So this was the candle close on Friday at the 44,415 level. This was Friday's close. So going into Sunday's open today. So between Sunday and Monday, I'm looking for some type of range to develop. And if I go down to the lower time frames, it'll be a lot clearer to see where some entries may be. But since we already kind of had S&T right here, I'm assuming that we're most likely, when I go to the lower time frames, I'll be able to tell it a lot more, but I'm assuming that we're going to be bullish not bullish, but bearish this week on most of these assets, especially the Dow Jones, because we have a couple highs, we have a couple lows right here. So we have a couple lows right there. We got this, oh shit. We got this one, we got this one. And I'm anticipating that we're gonna run these and then eventually run down into this imbalance right here, or this internal range liquidity from a daily perspective. So overall, that's my trade idea, or that's my bias going into this week. I'm anticipating us to sell off, and then especially too, with everything that Trump has been doing, with the tariffs, just basically with the tariffs and restructuring the government and all that. It's also been a pretty crazy week for the markets and everything, especially like when he first came out with the tariffs and everything. The markets kind of reacted negatively to that at first, which is expected, or which should have been anticipated. But go ahead and mark this S&T with YM. Got that. Then we got S&T with NQ. Also too, if I were to go to ES, it would have the, I think ES was the same as MYM, I believe. Nope. So yeah, so both ES and NQ, they both had that higher high form above Thursday. So either way, both of these assets, well, US 30 broke the correlation between all three of these assets. They should be these are correlated assets, so they all should be moving in correlation with one another. But the fact that the Dow Jones didn't create a higher high going into Friday, it actually created a lower low or a lower high. That's the break in correlation. So that leads me to believe that there's some type of institutional sponsorship inside of the marketplace. So we're gonna go with that. See, my stream is good. Not receiving enough video. I hope y'all don't experience too much buffering. According to this, I don't know what is going on with this. It was not too bad, But I'm gonna just keep going, rocking out, doing my thing. So if I go down to the lower time frame, I go down to the 4 hour chart. I'm gonna just clean this up a bit. Boom, boom. See, boom, boom. We got candle, that Thursday candle. Boom. Friday candle. Boom. I'm going to get rid of this. Actually, I'll leave it there. I'll leave that there. It's fine. So going into Monday's price action, or just based off of last week's price action, we do have an inversion fair value gap right here. So I'm gonna mark this right here. This is on the 4 hour chart. Mark this inversion fair value gap. So if I see any type of retest back up to this level, this is probably where I'll look to be entering in. Let's see. Let's see. Inversion right here. Let's look at the hourly chart. So from an hourly perspective, we have a little gap right inside of here for the 1 hour. So we have a little tiny fair value gap right here. All right, so this might provide some type of entry for us. I mean, regardless of where I enter at, and that's in this inside of this area right here, regardless of where I enter at, the stop is gonna go like right above here. It's gonna go above the candle that formed the S&T, and the candle or candles that form the S&T. All right, I want to say this is like a little order block entry right here also. Mark that. Mark that as an order block. Red. It says order block. There we go. Right, and you see right here, last week on Thursday, had a fair value gap right here. Right, it came in and tagged that gap, and that's also what created that. That's also a form of an SMT right there, side of that gap. Let's see. So we got a fair value gap to watch here. We got a fair value gap to watch here. If this one doesn't get filled, that's also another form of SMT right there between both of these assets. So I'm going to go ahead and mark this out. Mark that out. Mark this one up. Boom, 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 boom. Boom, 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 boom. Right, so we got our SMT. SMT, if I go back up to the 4 hour chart. Boom. All right. Yeah, just looking at the 4 hour chart alone, the only type of entry criteria I see from the 4 hour chart is off of this inversion fair value gap right here. But being that this is a daily market maker model, right? The ideal time frame to look for an entry on based off of the daily market maker model would be the 1 hour chart. So this is one that I'm electing to trade on right here. I'm gonna wait to see on Monday what happens, and then go up, and then I'll be looking at Monday's Asia, and going into Tuesday's London. I look to frame a setup. Either way, my target would be somewhere down here. This ideally is the target, However, I could also target this set of lows right here. So I could target right here. Um, I can target here, or I can target here. Like it doesn't have to reach all the way down here, right? Especially going into this week, it could just hit these couple lows right here, hit these couple lows right here, because there's also liquidity that's resting right here, these lows right here. So there's liquidity here, there's liquidity here, and as you guys see, there's more liquidity over this way. But ideally, this is the targeted area that I'm anticipating to get filled in. And honestly, it doesn't have to get, like I said, it doesn't have to get filled in this week. It can take 2 weeks or so before this area, this imbalance actually gets filled in. Just either way, I'm just looking for opportunities and executions on the way down to this level. If we actually do end up reaching down this way, so uh, there we go with that. Nope, get rid of that. Click that. Boom. So my elected trade idea or my ideal entry area is up here because it's also at that inversion fair value gap. It's tagging that inversion fair value gap and inside of that fair value gap. So my stop would go above here, and then I can target here for a little over for almost a 1 to 2, or I can target here for 1 to 3.5, almost 1 to 4. And this is definitely something that I can see happen within the given day, especially like if I find this entry inside of Monday. I might not do a limit order. I'll probably do just I usually just end up doing a market execution order, especially like if everything kind of like confirms itself out. But yeah, that's my initial trade idea so far. Right. Then I also had gold. I did a little markup on gold and silver. I'm gonna go over to this tab right here. But as you guys can see, right here we have gold. I want to see if this is on a daily. Right here we had gold and we had silver. I think silver was the one that had the clearest price. Yep. So silver and gold right here, right? From a daily perspective, last week gold basically practically already filled in its inversion gap that's resting right here. So this gap between Wednesday, January 29th and Friday, January 31st. Friday basically practically filled this in, so did silver. However, there is another imbalance that's rested right here below this one that is on silver that isn't on gold, right? So that's why I'm electing to trade silver based off of the S&T that we have right here, because it's providing me a clear take profit area, right? On gold, this same internal range, this liquidity pool right inside of here, this imbalance is right here between Tuesday and Thursday, the 30th. That's not here on gold, right? So this is the only inefficiency that I see unfilled that needs to be filled in. So any type of trading that we do experience this week, I'm also bearish on silver. Going into it right here, you see gold and silver for the S&T with gold. So these highs right here from Wednesday the 5th, that was earlier this week. So from the 5th of February all the way over to Friday the 7th, right? Gold made a higher high above this one. Meanwhile, silver, it made a lower low, right? So that same high right there from Wednesday to February 5th, and then over here from the 7th of February, right? We had that S&T. So this is so that right there is what leads me to believe that there's some type of institutional sponsorship happening inside of silver right now. I believe this inside of silver right now. So it's off a 4 hour chart. As you guys can see here, I have it also marked up that the Sunday's opening price going into this week. I'm gonna go ahead and delete the one from last week because I don't need it anymore. I'm gonna get rid of this one. I'm gonna get rid of this one. So going into it right here on Monday's opening range, I want to see like what I really want to see is like some type of Monday to open up above Sunday's opening price right here, and then tag some type of area. I have an order block mark right there if I go to the hourly because that's the correlated time frame for a daily market maker model. So the candle right here that formed SMT, it kind of broke above these highs right here. But either way, this is the last up close candle. So anything that goes below here, this basically identifies also as a change in the state of delivery of price. So this is what gives us that bearish order block right here, right? Because I'm honestly thinking if price does reach all the way back up here to this candle, it's probably just gonna reverse. But so we have a couple confluences inside of right here, this area. So we have this order block right here, right? The last opening price below this last up close candle. So we have the order block right there, and then we also have a fair value gap inside of here, right? So we have two confluences. If price comes back up and retests this area and respects it, that's basically the confirmation that okay, I think we're gonna target this area of liquidity or this imbalance right here from a daily perspective. Because we also have a set of lows right here, so we have some liquidity that's resting right here before we do tag that inefficiency from a daily perspective. So if I were to frame that idea, just if I were to enter here, stop goes here, take profit. It's about almost a 1 to 2, a little under. If I were to enter at the order block, it would definitely be a 1-2. But I don't think I can go wrong with either entry. If I wanted to guarantee getting in, I would probably enter here, maybe like a limit order, but also too for like just maybe a market execution. That's why going into Monday's Asia session range, I'm just gonna be looking at okay, where we traded, what does Monday's range look like? How far are we away from Sunday's opening price? Have we tagged any of these areas? And do we see like any type of indication that we're reversing from these areas? So for right now, that's my current bias and trade setup on silver as far as the metals go. So we have this on silver, and then we have this on US 30, right? But overall, this week I'm bearish on the market. I'm open to being wrong. You know, we don't. You know, at the end of the day, it's all speculation. So I'm open to being wrong. You know, but as far as right now, this is my current setups so far. Now I'm gonna go ahead and hop into reviewing the prop firm right here. So the prop firm is Elite Trader Funding, right? And this is a futures prop firm. So it's not a forex one. So if you're looking for a forex prop firm watching this stream, this isn't it. But this is a futures prop firm right here. I've done a funding challenge with them before, right? And I did pass. However, I ended up losing the account because I violated the drawdown. Stupid mistake by me, right? That tends to happen a lot with a lot of traders. But right here, this is a set of all their evaluations, and they also, like most other prop firms, they do have a lot of sales going on every month. Right now, they have a 65% off sale on the fast track account that they have. It actually expires in a couple hours, so y'all will probably miss out on that by the time this stream goes up. But this is honestly right here is the one that I'm thinking about doing. The one that I did before was the static, and they had a discount on it where I want to say it was about I want to say it was like about 70 to 80% off, but this 135 right here, the account, it was around $35 or $40 a month for the auto renewal fee. But uh, yeah, this is the one that I did because they have static drawdown, so the drawdown is not gonna change based off of like if you're already in profit and then it's gonna move the drawdown up. It's just gonna remain uh whatever it is. So in this case, with a 100K evaluation, the maximum drawdown is $625. So that means that the drawdown is like 99,375. So the drawdown is gonna stay that. Like it's not gonna move. It's gonna stay that, right? Because with a lot of these prop firm accounts, they normally have a trailing drawdown. So even if you're already in profit on the account, if it kind of like dips back below that, then if it dips like so like the original drawdown, it'll like basically just increase it from there. So if you end up having a losing trade and then it falls below the drawdown that increased, then you basically just end up filling the account. It's not something that I prefer, but at the end of the day, it is their business. They can do what they want. You know what I mean? And you know, we just gotta adapt to whatever the rules are, right? So even with my trading style, I prefer to swing. So I kind of do have to trade these funding challenges a little differently. They do have a diamond hands one right here, and this is what really interested me about them. The diamond hands one, this is basically like a swing account, right? But the thing is, as you can see, the price $365. You know, if you don't have $365, that you know you can like just fork over like that. You know what I mean? This is one that I would like to get into if they do have another sale. I would most likely prefer to hop inside of this one, especially because you get the $3,500 worth of drawdown and it's a $5,000 profit target. But they also have a daily loss limit of $1,500, so you can't lose more than $1,500 in the day. Let's see. They do allow resets for most of their accounts, but it's a fee of like $75. And you see right here, it has the end of the day trailing drawdown, so that drawdown is going to trail whatever your profit is at the end of the day. It's going to move the drawdown up and account for that. So that's why you kind of like have to be careful with these prop firms. Most of the time, I don't see most people. I really don't see most people trade a prop firm account for too long, especially like ones like this where they have like all these kind of like crazy rules and everything. They kind of like it seems like they want you to fail in a sense, you know. But also most of their accounts, they only allow a maximum of 2 positions, so either 2 minis or 20 micros, right? So probably trading the micros would be a lot better as far as like maintaining the account, because the minis, depending on what assets you trade in, the minis, they could really be like one contract could be, depending on your stock, could be like $2,000, right? And that's already near your drawdown right there, right? So that's actually violate the daily loss limit if you end up losing that trade. So but also too, because they do have a trade, they also have a trading view integration, and that's what I did because they are also partnered with TradeAvate. So they have TradeAvate accounts, and then you can link that TradeAvate demo account to TradingView and just trade it straight through TradingView, and that's actually what I've done, and that's honestly what y'all gonna see me doing as I go through with this prop firm right here. I prefer using TradingView for everything. So, but some of the evaluations, they have 1-step evaluations, maximum positions. They allow 8, so 8 minis or 80 micros. That's the 50K account. 100K account, maximum is 14 positions, 14 minis or 140 micros. 150, they have 250 and have a 300,000. But as you guys see, these 1-step evaluations, man, they get up there. Like 165, 205, 295, 515, $700. You know what I mean? Hey. They don't have a scaling rule either, so whatever account you get is just that's the account that you're gonna have. Intraday unrealized profit trading drawdown, so that's that end of day drawdown. so like whatever in profit you are, they're going to calculate that in, factor that in, and then increase your drawdown as a result of it. Uh, let's see. Oh, they also have a 5 day trading rule, so you have to trade the account for a minimum of 5 days to meet that requirement to of passing the challenge. Let's see. They also have this is the static drawdown evaluation that I talked about earlier. Let's see. The fast track. This is the one that I'm thinking about doing, especially because like it has a discount on it right now, and that so they allow 14 maximum positions, so 14 minis, so 14 contracts, or 140 micros, up to 140 micros in contracts. So they have this one, the 100K and the 250. This is one that I'm thinking about doing because mainly one, it has a discount, and then also two, this one doesn't have a monthly renewal fee. So if you pass it, you pass it. You don't have to pay a monthly renewal fee every month like most other prop firms do. Like every 30 days, they just hit your account again if you still have it. So, but the drawback is you got to pad. You got 14 days. You have a maximum of 14 days to actually pass this account. So you kind of got to be really fast with it, you know. So you know how these prop firms are. It's like it's kind of like give and take, right? So this is what I'm thinking about doing. Let's see. Oh, it's $80 per month once you $80 per month once you qualify for it. So they still gonna have that monthly fee, but at least as far as like having to pay $165 on a demo account, right, every month until you pass it, this is better. This is better because this is kind of like, all right, I didn't pass it. All right, oh well, on to the next one, kind of. $75 a pop at regular price, 175 a pop at regular price. So this is kind of like more similar to like those forex prop firms. Then they have the end of day drawdown evaluations. So these evaluations have an end of day trailing drawdown and daily loss limit, right? So a daily loss limit of on a 50K account, $1,100, profit target 3,000, maximum drawdown is 2,000. But at the end of the day, depending on what your drawdown, depending on how much profit you're in, that drawdown is gonna trail up. So if you close a trade, say with $1,000 in profit, I want to say they're probably gonna move your drawdown up, probably somewhere like around $500 or so, something above the account limit. So and then right here we have the diamond hands evaluations. So yeah, this is the prop firm that I've been with, that I've done business with before. Honestly, I might go for this fast track evaluation. I think I can, especially with this week, some of the trade ideas that I have, I think I could pass the account pretty fast going into this week. So I might like to do this one. But I definitely may give this a try, the diamond hands evaluation, because this is more so suited for swing traders, which is kind of more my style. So actually we're gonna click and see some of the rules right here. All right, so they have the rules for the accounts right here. Trade a minimum of 5 days, hit your profit target, don't hit your end of day trailing drawdown or daily loss limit, don't trade more than allowed contracts. Do all that, you will be assigned a lead account in 72 hours. Okay, the trailing draw. How does the trailing drawdown work? In your evaluation account, your drawdown trails your highest end of day balance. You also have an intraday daily loss limit calculated from your prior day's ending balance. Right? Be advised that any losses incurred from open positions will affect your daily loss limit. This means that if an open position dips your account balance below the daily limit intraday, you will fail the evaluation. And, you know, these are kind of like the rules that I don't like when it comes to these prop firms. You know, this is the stuff that's kind of annoying, you know, but I think most people already go into this with the expectation of like, okay, I'm not trading with them long term. I'm just trying to get a big payout and move on, especially like firms like this. They also have a chart showing what that would look like. So say, all right, so that 48,000. So for the swing account, the $50,000 balance. Say, this is the drawdown, $2,000. So at the end of the day, you make $550. So now your end of day balance is $50,550. Now your drawdown moves up from 48,000 to 4,900, right? Let's see. So then the next day, let's say you incur a loss of $250. Now your account value is $50,000 to $300. But now your end of day drawdown, it gets moved up to 49,450. That's crazy, man. that is fucking crazy. Or your daily loss limit. That's your daily loss limit. The trailing drawdown, it gets moved up from 48,000 to 48,550 because that's how much you made the previous day. Let's say going into the next day, 48,550. I'm assuming you lost $500 here, so the end of day balance is $4,900, $800. So as long as you don't dip below that 48,550. But then let's say the next day you lose $800. So now you're down to 49,000. This is the trailing drawdown right here going into the next day. So 49,000. Let's say you make $1,800. So now you're back up to 50,800. But then also see like your daily loss limit is also changing also. And this is kind of like the confusing stuff that really messes me up about these prop firms. It's like, it doesn't really seem like they're really here to really help traders. It seems like a quick cash grab all the time with most firms. So 49,100. And this is an example of, say, you were to break or violate the rule, so that 49,100, the account value dips below the 50,000. The end of day drawdown is 48,800. But you had a couple losses, a couple string of losses right here, and this $400 loss actually is what ended up filling the account for you. So it's, man. All right, but they do have all the rules and everything right here. Details on trading days. What qualifies as a trading day? Any day you place a trade qualifies. Sunday and Monday are counted as the same trading day. So if I were to make a trade execution Sunday night, then going into Monday, that would be the same day. That would be counted as one day. All right, but yeah, if you guys want to check them out, feel free. Like I said, me personally, I might go with this fast track evaluation, especially because like it has a discount on it right here. And if I do that, that'll be updated in the next stream for y'all, and I'll start making videos on it and try to get some payouts. So, but other than that, I'm gonna wrap it up here. If you guys stayed to watch this long, I appreciate it. And basically, I'm just gonna wrap it up here. And hope you guys have a wonderful trading week. All right. So this is Jay Davari, and peace out, y'all.